Good afternoon. This is Oliver Slow, Blue Line Futures, coming to you from the Chicago Board of Trade with another episode of the 2-Minute Drill. Do want to remind you, if you do not follow us on YouTube, me and my partners put out a lot of great daily content covering a lot of different markets, not just in the agricultural space, but the energies, the precious metals, indices, and stocks. So head over to YouTube, follow Blue Line Futures, turn on that notification button as well so you know when we release a new video. We put out multiple a day, so if you want to stay up to date with us, go ahead and subscribe and hit that notification button. Now we can get into the charts, and we're going to be sticking with the grains here to start. We got the December corn future contract pulled up here, and a little bit of weakness in today's trade. All in all, there wasn't a whole lot of technical damage done. Going into Friday's WASDE report, we're going to be looking at this 416 area, give or take a penny, is a big pivot point for this market. A break and close below there could potentially lead to some additional selling pressure with not a whole lot of technical support until you get back towards that psychologically significant $4 level. Now 416, where did that come from? Well, this was previous resistance here through September and the eventual breakout point. So previous resistance is now going to act as support. Right now, the trend of higher highs and higher lows is still intact, but a break and close below here would temporarily negate that. Now moving over to soybeans, we see a little bit different of a picture. Things have certainly softened up quite a bit. Talking about the trend of higher highs and higher lows in the corn market, that's something that we've seen break down here in today's trade with a break and close below trendline support, which has taken prices really back to this breakout point from September 23rd. $10 psychologically significant, and there's also some support down near 10.06. A break and close below 10 to 10.06, and that could potentially open the floodgates. A couple weeks ago when we had this big move higher, a lot of the talk was on weather concerns in South America, particularly in Brazil with it being hot and dry. But I think also underreported was the Chinese stimulus. I think that played a big role in the price action higher as well. Now that you're seeing some of those stories maybe be baked into the cake a little bit more than they should have, you're seeing some of that air come out of the market as we're still dealing with pretty big balance sheets. We're going to get an updated look at some of those numbers from the USDA on Friday, so that could potentially be a catalyst to either make or break this chart setup. So again, going into Friday, right here, right now, still halfway optimistic on corn that it can trade on both sides. Not that it's necessarily going to run away, but I do think there's good support under the market, technically and fundamentally. Soybeans, on the other hand, a little bit more cautious. So if you're a producer who needs to protect downside, give us a shout. We'll be happy to help you out. So that's what we're looking at. That's what you should be looking at too. It's been Oliver Soap with Blue Line Futures. Remember, trading futures and options involves substantial risk of loss and is not suitable for all investors.